Hello, good afternoon. You have tuned into Your Stocks, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. A quick look at what the market is doing. Almost near today's lowest point is what the market is trading at. Below the 23,500 level is what the Nifty is at. Even the mid and small cap, that has also seen a fall coming in furthermore, and now almost near today's lowest point as well. Nifty mid cap is at the day's lowest point, down 0.6%. Small cap is also down at the day's lowest point, down 0.3% in today's trading session. Nifty Bank, that's also seeing a sharp fall coming in today, so keep an eye on that. Other than that, Pharma, IT are some of the names that we're seeing in focus today. And apart from that, only green on the screen today from the sector performance is Nifty FMCG. As of now, managing to hold on to some bit of green on that front. In terms of stocks, we have Tata Consumers, Britannia today, UBL, which is managing to hold on to some bit of a gain there. But that's what the market setup is looking like. But this is a show where we solve all your stock-related queries. And to solve all of that, we have our experts joining in with us. Today, we do have independent market expert Shahina Mukadam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, to answer all your stock-related queries. Good afternoon, ladies, and thank you so much for joining in with us, as always. Vaishali, quick check in terms of the market today. Right now, the Nifty has gone below the 23,500 mark. Last couple of weeks, we did see that decent performance coming in, green on the screen. But today, a bit of a different story, right? What we're keeping an eye on last day in terms of a trading session for the financial year. What should we keep an eye on as a level there now?
Very good afternoon, all of you. So yes, market has been sluggish today. One is because we are ahead. We are looking forward to the long weekend. Secondly, we are going to have a lot of announcements the coming week. So market is going to see some consolidation at these levels. So the near-term basis, 23,300 is the actual support that one should look for. And of course, we are seeing a strong resistance coming in, 23,700, 23,800. So either ways, we see a decisive move. We will get the clarity on the further trend.
Okay, surely keeping an eye out on those, clarity for further trends coming in for the market as well. But on that note, let's get started with the first query for the day. And we have Shankar Das, who's writing to us from Hyderabad. He's holding 100 shares of Indian Bank. Prices 548 rupees per share. He wants to know the long-term view for the stock as well. Shahina, what's your view coming in for Indian Bank, right? The company in Q3 had spoken about a guidance of around NIM guidance of 3.4 to 3.5%. They're talking about expecting a loan growth of 11 to 13% as well going forward. Your view on Indian Bank long-term story seems to be intact?
Yeah, afternoon, Vinny. Yeah, it's not a bank that we talk of very often. Yeah. But if you actually look through, as you mentioned, they are not only giving a decent guidance going forward, but if you actually see the performance that they showed, that also had shown considerable improvement. You look at their NIMs, as you mentioned, improved. Their capital adequacy ratio is about 16%, which is sufficient. They don't really need to, issue further shares, at least in the medium term, to grow the type of loan targets that they have. Also, if you see their return on assets is 1%, their net NPAs is very low. It's just about 0.2, slightly above 0.2. So I think it is pretty attractive. Price to book just about slightly above 1 time. So I think it looks decent at current levels, and he can hold with a stop loss close to his issue price, to his buy price.
Buy price. Okay, keep an eye out on those levels over there. Buy price is 548, so keep an eye out on the stop loss somewhere on that is what Shahina is saying. Vaishali, on the technicals, what are you looking at in terms of Indian Bank, right? Last 1 year, not much in terms of a move or a return that we have seen. It's quite in the range that it has roamed around. So now, Indian Bank, does it seem like we could see a bit of a run-up coming in going forward?
So actually, if you go to see, it has been going through a lot of consolidation. There has hardly been any trend. So even if I look at the chart from the near-term basis, I think it's getting into a trend. So 520 should be taken as a near-term support. And once we see the stock moving about 560, I think it shows a further confirmation. This could go towards 600 plus. So that is how I think one should trade the stock.
Okay, surely keeping an eye out of that. Now, let's move on to the next query then. This is coming in from Ram Kumar, writing to us from Mumbai, holding 230 shares of Ola Electric, price is 102 rupees per share. Long-term story for Ola Electric. Shahina, your view coming in on this one. You know, time and again, we do have people sending queries on Ola Electric. What are your views now? Viewers making a loss on this one. What should they do?
Yeah, it looks like it's a risky hold even from current levels, though, the stock has corrected a lot. So in the shorter, medium term, it still looks very risky because if you see the competition, there's a lot that is even being planned to come in terms of other competitors, very good products that are likely to come in the EV space. Also, while they are taking measures to improve their service, setting up new centers, they have got their research that they've put in for new batteries. But there again, you don't know how it's going to work in terms of import duties and whether imported batteries will become, cheaper in the EV space. So there are a lot of issues. So I would say that it's better to at least, book some part of your loss and switch from here.
Okay. Book some part of a loss and switch from here. And if they're to switch, where would you tell them to switch then? Would it be in this two-wheeler auto space as well?
Not in the auto space, not for the next 3 to 6 months, neither two-wheelers nor four-wheelers. There's too much happening over there for us to even estimate what's going to happen. Some other sector, defense.
Okay. Thanks for that view coming in there, Shahina. Yes, Trump is surely keeping everyone on their toes nowadays. So let's keep an eye out on that. But Vaishali, in terms of technicals, I know not much in terms of data, but is there anything that, you have managed to read in terms of Ola Electric? And if you are also suggesting a switch, then where should they switch?
Well, switch is a must, but I think right now, since it's already so oversold and he has held on for so long, keep a stop loss of 50 because right now it's showing signs of exhaustion as far as selling is concerned. So on near-term basis, a stop loss of 50 should be maintained. And you never know if the stock bounces, it would be better. It can give a bounce back up to 65 to 70 levels. That would be the level to exit.
Okay, exit, but maybe there could be some bounce back is what Vaishali is highlighting. So yeah, you can reduce that loss that you're making and sell it at that 65-70 level there. Let's move on to the next query then, and this is BEL that we'll talk about. Nagarajan is writing to us from Mumbai, holding 800 shares of Bharat Electronics, price is 298 rupees per share. Wants to know if he should continue to hold or look to sell at current levels. Shahina, you were talking about the defense spec. There you go. You have a query coming in on that front. So what should the viewer do now?
Yeah, this is one defense stock that actually after this big run up, you're seeing some small bit of correction. But these corrections actually give you an opportunity to buy. So this would be one of the top picks. Any dip, you can actually add this stock. 80% of its revenues come from defense, which is largely like radars, electronic items. So there, I think, the growth is going to be quite good going forward. They're already showing good numbers and order book close to about 75,000 crores, which is 3 times its revenues, 1 year forward. In terms of even margins, they are expanding. So to that extent, it looks like a decent bet to hold. Valuations, of course, are not very cheap or anything like that. But if you're holding it for 1 to 3 years, it looks like a great bet to hold.
Okay, 1 to 3 years, a great bet to hold. Valuations are not too cheap. But on the technicals, Vaishali, what is your view coming in? The buy price is 298. It's currently around that level as well. So what should the viewer now do? Continue to hold this one, maybe add some more on the technicals. What's the indication?
The technicals, the trend is very intact. But if I heard it right, it was for a shorter period. So for shorter period, we were seeing resistance at 310. And today's high is nearly 306, 307. So I would say keep your stop loss to cost and see how it goes because right now we are seeing some corrective move setting in the market. So if the cost goes down, then I think this can go lower towards 290, 280. So depending on your time period, I would say take your call.
Okay, depending on your time period, if it's the near term, obviously maybe some downtick could come in. So keep an eye out on that and the levels that you mentioned as well. Next query for today is coming in from KS Rao, who's writing to us from Guntur. He's holding 50 shares of Delivery. This is at a price of 400 rupees per share. He's a long-term investor. Wants to know if you can, he could continue to hold this for a 2-year time period. Shahina, your view for Delivery, not much of a performer that's come in. So what should you keep an eye out on here?
Yeah, see, if you look at the performance, 2 years it's correct. In last 2 years, the stock has corrected actually. But going forward, I think it is likely, closer to current levels or maybe slightly lower, it could bottom out because you see the profitability, it has turned into profitability in in this current year, FY25, versus losses earlier. Now, on the other hand, volumes in terms of their e-commerce business, that is slightly sluggish, which we are seeing in the last quarter also. But in terms of margins, it is trying to, improve its cost efficiency. And there, I believe it could do better going forward. Also, the balance sheet is pretty strong. So it can support growth either through M&A or through additions in terms of their capex. So I would say it's a hold at current levels. Valuations here also are not cheap, but I would look at it from a 2-year perspective and say a hold.
Hold from a 2-year perspective. That's the view coming in from Shahina. But on the charts and technicals, Vaishali, what is your indication coming in, right? 43% downtick in just the last 1 year. They bought it at around 400 rupees and now currently the stock is at almost 250 rupees. Does it make sense to maybe look to average also if they're willing to hold it for a long period of time?
So if it's for a long period of time, I think it makes sense to average at 240 levels because I'm looking at the weekly chart, the daily chart, all have seen a steep fall and we are right now in the oversold zone. So I guess 240 should be the prominent support and that is a level where he can average it out. So at least you get a good price to exit. I mean, once you see a bounce, it can, in all likelihood, this can show a bounce up to 300, 320. So that would be the level to watch for to make an exit.
Okay, keep an eye out on those levels over there for delivery, 300, 320. Maybe you can look to exit at those levels. But on that note, we're going to step into a very short break. But here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens. Welcome back to Your Stocks on CNBC TV18. We still have our experts with us, Shahina Mukadam as well as Vaishali Parekh, to solve all your stock-related queries. Let's move on and carry on with those queries then. Chola Finance is the next query on. We have Gopal Krishnan, who's writing to us from Kerala, holding 500 shares of Chola Investment and Finance. That's the stock, okay? So Chola Investment and Finance at a price of 1,500 rupees per share. And this, he's been holding it for the last 6 months, so making some bit of a profit. Right now, the stock is trading at 1,700. Wants to know if he should look to accumulate more shares for the short term, or maybe just book out his gains. And also, if yes, book out the gains. At what level should they look at, going forward as well if they want to hold as well? Shahina, let me take it to you first.
Yeah, I would say it is better to book part of your profits at current levels in this bounce, given the fact that, the stock has rallied considerably in the last couple of weeks, one. Two is that at these levels, valuations have become pretty stretched. It's about 6 times price to book. Growth is decent. They are growing around 25% if you look at their overall profits. NIMs are also doing better. You also have their net interest income doing better. But at the same time, in terms of pure valuation, I would say better to book some profits.
Okay, better to book some profits because of the valuations, is what China is saying. But on the technicals, Vaishali, they want to know also if they can, add some more at these levels for short-term gains. Is that a possibility? Or you would also say just book out some of your gains right now?
So I would say market still is not on the whole giving us a clarity whether we are on a uptrend or so. So I would say keep a stop loss of 1,700 because like all financials, even Chola Finance is getting into a trend. So 1,700 should be taken as a stop loss. And if we see the continuation in strength in the market, this can go towards 1,850. So I would not say buy, add more, but hold on.
Okay, not add more, but hold on and keep an eye out on those levels over there, which Vaishali mentioned. Let's move on to the next query for today. We have Shrikant, who's writing to us from Tamil Nadu, holding 1,000 shares of PG Electroplast. Price is 228 rupees per share. Wants to know if it's a good time to hold more or maybe just book out profits? Stock is trading at 900, right? About 900. Shahina, your view on PG Electroplast?
I think it is better to take some profits off the table. Here, of course, it manufactures AC components, parts, and the growth is pretty good. They're doubling their profits, doubling their turnover. So on a small size, of course. But at the same time, I think valuations are pretty stretched if you're looking at a 1 to 2 year period. So I would see a bit of consolidation coming in, setting in for the stock. Simply based on valuation for the shorter and medium term, I would say you could take some profits off the table.
Absolutely, take some profits off the table, because this move that has come in is only in the last 1 year, right? Like, I'm just checking the graph right now. Last year, the same time, it was 166 rupees. Today, it is at 930 rupees. Vaishali, your view on the technicals. Are you expecting a further more upside? Already 400% up in the last 1 year.
So I would say yes. See, the trend is still intact, and in a market like this, when it is still showing a clarity in an uptrend, I would say yes, it makes sense to hold. But of course, a trailing stop loss is a must. So I think 880 would be acting as a trailing stop loss. And if we see, because volume has been decent, it is very likely it can reach as the previous high, that is 1030 levels. So I would say hold with the trailing stop loss and look for this target.
Okay, hold with the trailing stop loss and keep an eye out on those target levels that Vaishali mentioned. Next query for today, we have Momita Banerjee, who's writing to us from Kolkata. She's holding 60 shares of Cochin Shipyard. This is at a price of 800 rupees per share. Making profit on this one. Should she continue to remain, be invested in the stock, or maybe book out her profits? Cochin Shipyard, your view on this one, Shahina, as well. What is it? This sector surely has seen a lot of importance coming in, but would you suggest the viewer continue to hold?
Yeah, the sector is, coming in focus also. I mean, quite some now, couple of quarters. At the same time, it is also reflected in the performance that these companies are showing in. The order book here in Cochin Shipyard is over 22,000 crores, which is now around about 5 times their current turnover. Now there again, they continue to get good orders. I would believe in terms of valuation also, it is not too expensive, though it is 35 times P. You have price to book about 7 times, but I would say it's a hold at current levels, and if it corrects, you can average.
Okay, corrects, then you could average. So you're suggesting a hold. Vaishali, on the target side, what is the level that one could keep an eye out on? Would you also be suggesting a hold? Because she is making some bit of a profit, and to what level can you continue to hold the stock now?
I think yes, it is basically, it has hardly shown any movement right now, but the stock is at a support level. So I think near-term target could be 1800 levels. Above 1800, we can have a relook, and then it can go towards 2400 or so. So I would say hold with a near-term target of 1800.
Hold with the near-term target of 1800. So keep an eye out on those levels over there for Cochin Shipyard. Next query for today, and this one is coming in from Nisha Sarkar, who's writing to us from Nagpur, holding 80 shares of Swiggy at a price of 330 rupees per share, exactly at what the stock is trading at right now. Wants to know the long-term prospect for her investments. Your view on this one, Shahina, right? Quick commerce, Instamart, and all those apps have surely picked up pace. We're seeing good traction coming in as well. E-commerce is a trend that's picked up. So what is it that you should watch out for in terms of Swiggy? Long-term investment prospect intact?
See, there is a lot of competition coming in. It is a high growth segment, and there are, there's a lot of potential. Having said that, I think it's better to be, if you're invested, be invested with the leader. These are concept stocks. And while Swiggy is showing good growth, at the same time, you're seeing pressure on their margins. So if I was to be invested in one of this, one stock in this sector, I would still prefer Zomato. So I would say it's a switch.
Okay, yeah. So you would prefer Zomato over a Swiggy. Vaishali, not much in terms of charts, right, since November, but any view?
So I would actually, I'm quite sure of Zomato, because it has corrected so much, and we are pretty much close to the support level. So I guess if there is any pickup, I think Zomato will be the one which will show quick momentum. So that is the stock that I would choose.
Okay. That's a view coming in from both our experts. They do like Zomato a bit more in terms of leader versus Swiggy, and obviously in the technicals, not much chart is there for Swiggy. But ladies, thank you so much for joining in with us. That was the last query for today. Hope you all have a great long weekend as well, and see you all back on Tuesday. And viewers, thank you so much for tuning in to CNBC TV 18. We'll wind down this edition of Your Stocks. Thanks for tuning in. Up next, we have Closing Bell.